Right, to take us through how he's playing the commodities space is Peter O'Connor from Shaw and Partners, and he joins us now live. Peter, great to have you on the program this afternoon. Let's maybe start with iron ore because it's been reflected in some of those stock prices this afternoon. It was a pretty sharp fall. What was the reasoning behind that?
It has been a sharp fall, hasn't it, over the last few weeks? And happy Monday. It's a great way to start with the resources all down. But look, what's driven it is really steel and steel pricing. So whilst we all talk about iron ore and we see the iron ore headlines every day, it's really following the steel price and where steel demand is going, and steel prices which have been so robust over the last year post-COVID, specifically out of China, but now more broadly globally. That's taken iron ore and other raw materials with it. But over the last 2 weeks or so, from about May 11, May 12, steel prices, both reinforcing bar for construction, also flat products, hot rolled coil, have rolled over and they've come back quite sharply, and that's taken the raw materials prices down as well. That's been the key driver. We've seen that volatility, and the peak in iron ore price, again, that same sort of time frame a week or two ago at $235. That backpedal to $200 is very much in line with what's been happening in steel. But the undercurrent has been what came out late last week in terms of a government paper in China about a 5-year plan to become more self-sufficient. And whilst that in itself in iron ore is not a new story, it's been sort of talked around in the background for probably 10 or 15 years, there seems to be more focus on that now when you segue or you weave those two together with what's happening in the steel market. And it's certainly a market where price is lower and could actually be a lot lower from here. So based on steel margins in the steel industry in China, the iron ore price could be, all things equal, another $60 lower to give back what they've just lost. So risk reward, it's probably still lower, but it really depends where steel moves from here, but we may have seen our high.
Yeah, I mean, you mentioned what's going on in China there, that 5-year plan. I mean, it is a long lead-in time, particularly when they've got to try and source a reliable supply from some of those countries they're looking at, such as Mongolia and I think it's Myanmar and so on, isn't it?
Yeah. Although the ones that most catch my eye, and I think the market are looking at with the potential to do something, is Simandou, which is in Guinea, but also Cameroon and Gabon. They're areas where there's been a lot of study, a lot of work done for a long time, going back to the last cycle, in fact, 10 years ago, and in fact, in the case of Simandou in Guinea, going back nearly 20 years. And whilst they've been talked about and been pushed back, they're now in the hands of holders, particularly the Chinese, who aren't focused about return on capital necessarily, or shareholder returns as a Western company like a Rio Tinto is or should be. They're focused on getting their supply back in equilibrium so the price will reflect the marginal cost, which is a lot lower than where it is today. So ask yourself the questions: who builds the most railway lines in the world at the moment? China. Who builds the most tunnels? China. Who builds the most bridges? China. Who could build a railway line through 650 kilometres of really challenging forest? Probably China. And could they do it in a 5-year time frame? Probably. So I'm looking at Simandou in Guinea as being possibly the area where they get their most benefit most quickly. Could that be by 225? Maybe not, but it's not going to be far after. So once you start changing that balance of where supply comes from, you start to change the marginal cost and you start to impact the supply. And the Chinese steelmakers save $1 billion for every $1 the iron ore price is lower. So think about $200 today, and what if it's back at 60? That's $140 billion annual saving to the Chinese steel mill per year. It's a big deal, and I think there'll be economic activity will reflect this as well, demand, scrap usage as well, but don't underestimate the resolve of a steelmaker who's been put into a corner. So I think it's probably more important now to think about this, but it still is medium to longer term dated, but short term steel demand is going to be key where it goes from here.
And what about coal, Peter, before we talk about individual stocks and how it's affecting them? What are we seeing when it comes to price action?
There's been a great backdrop, particularly in the coal space, which relates to steel or metallurgical coal, and that price has been suppressed for particularly reasons related to China trade sanctions and issues with a lot of cargoes of Australian coal sitting off Chinese ports for nearly a year. And that's held our coal price down to sub $120 per tonne pretty much over the course of the last year, where the Chinese domestic price equivalent is about $300 it touched just a week or so ago. And the Canadian and US shippers are enjoying the price in the mid $250 range for effectively the same type of coal. So we've been penalised over the last year, and what's changed just of late, we're starting to see some of the cargoes move off the coast of China. One in particular, quite symbolically, a boat that had been there for 365 days, a boat that left Gladstone this time last year, has just been unloaded. So there's now about 19 boats sitting off China, down from a maximum of about 70. There's about 2 million tonnes of stock of coal in those boats off the port. So as that clears, and it is clearing, we'll start to get the price reach a dynamic which is somewhere in between the Australian price today and the Chinese price and the North American price. What does that mean? Coal equities are exposed to that, Coronado coal in particular. Whitehaven to a lesser degree, and some of the smaller names will benefit from that. And I bet the Coronado board are sitting here wishing they could have got the price today they were getting 3 weeks ago, because it would have probably solved their issue with having to do an equity raise.
All right, Peter, let's switch to gold and specifically Northern Star. A bit of news out then. They've got a bit of a change at the top, and you're also expecting some more information just regarding the super pit.
Yeah, look, on the good front, the catalyst front, we like to talk about what's coming up. Well, this week, I'll get to the chairman next, that's important, but the super pit, which they acquired last year a half stake of, and when they rolled up their company into Saracen last year, they picked up the whole lot. And this is the first time really since pre-COVID the company's been able to have a site tour of any of their assets. So there's going to be, I think they're very itching to talk about what they're doing, the success of the integration of both the Saracen deal as well as the super pit, and what it means to their very aggressive and ambitious profile up to 2027, which sees their current pro forma capacity go from about 1.6 million ounces of gold to about 2 million ounces of gold. So I'm expecting a lot of headlines, a lot of talk, a lot of feedback from that on Wednesday, where you cram into a plane a whole bunch of execs from Northern Star and a whole bunch of analysts on both the buy and sell side. So stay posted on Wednesday and Thursday and Friday as that news starts to come back. But getting back to the most important thing, chairman change, revolution of the company, it's a big deal, and we should not lose sight of the fact a change like this is incredibly material. And whilst Mike Chaney I have the most highest regard for, given his time at Wesfarmers and some of his directorships and chairmanships since that time, and he's an exceptionally capable chairman, and what I like most about him is a dispassionate allocator of capital, and he's got a distinct value bias, two things I really admire in executives and also directors. That said, this is a major change for Northern Star. The person who's driven this company from a minnow back in the sort of the single-digit teens market cap to a top 50 ASX company today, he's now effectively leaving the company from 30 June. And again, that's a big deal. And we look back at milestones in the past, we've seen change like this. And at the time, I learnt the hard way in the mid-2000s when Rio Tinto changed their executive chair and their head of strategy. Look what's happened in the 15 years since. It's been a hellish journey for Rio Tinto shareholders and those of the company. So don't underestimate a change at that level. There was an enormous vacuum to be filled when Bill Beaumont, the existing executive chair, leaves. And whilst I have the utmost respect for Michael Chaney and what he can do, it's going to be interesting how it unfolds. And the team that are there are a great bench and very strong, but they'll be operating without that drive, that entrepreneurial flair that Bill Beaumont's had over the last decade or so. What I'm saying is not going to probably come out for the next 1 or 2 or 3 years, but we need to be very mindful. This is a big change. So positive at this stage, but I'm watching it very, very closely, optimistically, but also cautious at the same time.
All right. I'm assuming you're going to be on that plane then. You're going to visit the super pit?
All good analysts should be on that plane, because that's where you get the news flow. And being again crammed into an aeroplane with executives for 12 hours is a way to get what's happening, to get the sense for the operations. And it's not just seeing a PowerPoint presentation, but it's actually talking to them, hearing, feeling what's going on, and kicking tyres. And so I think it should be a pretty big day and an important milestone for Northern Star. They've just updated their mineral reserve resource, particularly for Kalgoorlie Super Pit, and they've got a strategy day coming up at Diggers and Dealers in August. So should be a big week.
Yep, good opportunity to get your feet dirty and get amongst it. Peter, thanks so much for joining us from Shaw and Partners.
Thank you very much.